screen. Noted. Okay, so today we'll be looking at not-for-profit, accounting for not-for-profit organizations. That is non-profit making organizations. So we've been, for the last 2 or 3 lectures, we've been looking at profit-making entities. We've been looking at how to prepare accounts for profit-making entities. We looked at a sole trader. We determined how we find the sole trader's profit or loss. And we also looked at the accounts for a manufacturing entity. We looked at how we get a manufacturing account and then get our trading, as well as the P&L, and also our statement of financial position. So in the two different scenarios, ideally we've been looking for profit for those other different entities. So what happens when an entity this time around does not exist for purposes of profit making, but rather it exists and doesn't make profits? How are we as accountants going to treat reporting for such an entity? So today, that is what we're going to be looking at. We're going to go into detail and see how we account for such non-profit making organizations. So we'll be looking at the general introduction, the terms that will be used in this particular topic, the sources of income for non-profit making entities, the special funds, and preparation for final accounts for non-profit making organizations. So when we talk about non-profit making organizations in this context, we're talking about things like sports clubs, social clubs, societies. For example, some of you are like in church groups, and you find maybe in your church group you like collect money and go and do an initiative. You like pull your funds and go and do an initiative. There are those of you who belong to groups like Rotaract or I think it's Rotary, sorry. You find that you pay money, or you pay like a subscription or of the sort. That kind of club or that kind of society is also part of what we call non-profit making organizations. They don't exist for the sole purpose of making profit, in as much as they may make it at one point, but ideally they are labeled as non-profit making organizations. So we have very many examples. You can task yourself to think about the different examples that you might have come across. So we're saying that non-profit making organizations are also referred to as unincorporated organizations and include entities such as sports clubs, social clubs, and societies. The kind of final accounts that were usually prepared by these organizations, we either have receipts and payments account or the income and expenditure account. So ever since we started our FA, we have been we've dealt with cash books at some point. We saw discounts, we saw payments going out, we saw cash coming in, that kind of thing. Here with non-profit making organizations, we will not necessarily refer to it as a cash book, but rather it will be a receipts and payments account. So same concept with a cash book, whereby it receives money and also pays out that money. Will be the same concept with receipts and payments. So here it's the terminology is different, but of course the accounting concepts are also similar. Not the same, but rather similar. We have the income and expenditure account. The other side, with the sole trader and manufacturing, we've been trying to get profit. Whereby we're getting our gross, basically we're getting our gross income against our total expenditure. And whatever balance we get after offsetting would be either a loss or a profit. Here, it will not be called a P&L, but rather it will be called an income and expenditure account. So the above accounts, they are the summary of a cash book for the enterprise for a particular period. That is, when I talk about the above accounts, I mean the receipts and payments account, as well as the income and expenditure account. So what are the different terms used? To differentiate non-profit making organizations from profit making organizations, we will look at these key factors. These are the indicators that show which one belongs to where. So for profit-making organizations, we will have a trading profit and loss account, whereby we'll get our sales, cost of sales, get our gross profit, and also get our expenses, and whatever will be the net will be like I had told you. But here, instead of doing all that, we will have basically an income and expenditure account. So we get all the total income that we received in a particular period, offset it against the different expenses that we've incurred in that same period. Here, where we are getting a net profit, we in this time around we will refer to what ideally should be the net profit. We will refer to it as surplus of income over expenditure, meaning that you have more income compared to your expenditure. When we have net loss, yeah, ideally in the sole trader stroke manufacturing or profit making organizations, when we say that we have a net loss, it means that we have been spending way more money than we have. And the same concept comes here. We call, instead of saying that we have made a loss, we say that we have excess of expenditure over income. So you see that concepts are similar, though the wording is not the same. It doesn't mean that just because you've forgotten, let's say if you're answering a non-profit making organization question and you've forgotten what a net loss is, then you just, what we call excess of expenditure over income. And then you end up putting the word net loss, you'll be lying to the examiner and also lying to yourself, because a loss is very, very different from expense of expenditure over income. So you try to get the wording as right as possible so that you can apply it respectively. If it's a profit-making organization, use the right terminology for profit-making organizations. If it's not a profit-making organization, also use the correct terminology. So we have something called the statement of affairs. Now, usually with a profit, or sorry, when we're looking at profit-making organizations, we had our statement of financial position. And in that statement, I was telling you that it usually a balance sheet, just like you hear the word balance sheet, it usually has balances of the closing period. So every balance that you close with is what you will put in your balance sheet or stroke statement of financial position. Now, here in a not for profit, in addition to that closing balance sheet, that is to say, in addition to that balance sheet, we have something called the statement of affairs. A statement of affairs records opening balances at the beginning of a financial year. And usually we calculate for our statement of affairs to help us know how much is accumulated fund, how much money do we now have over time. If people have been paying subscriptions for like the past 10 years, we need to know how much. For example, if let's say we are doing for 2024, we need to know how much the accumulated fund as at the beginning of 2024 was, before we can actually now get into business and start transacting, so that we know how we started, how we moved in the middle, and how we ended. So what are the different sources of income for non-profit making organizations? Remember I told you that for profit making organizations, you just say you have just wording to say you have excess of surplus, so you have surplus, or you have excess of expenditure over income. That is what you, so what are the different sources of income that you are not for profit organization may make, because you may exist and you're not selling anything, but you're still getting money. So the organizations obtain their income from membership subscriptions for annual membership of the club, including initial joining subscriptions for first-year members. Some of you are in those Vivina or circles, those like small groups where you save your money, or they tell you this is just like a small, maybe like a small club, whereby if you want to join the club, you pay 10,000 and then we shall give you a t-shirt, shall give you a key holder, shall give you a notebook, and then maybe the remaining other 10,000, maybe they tell you this is what you'll be using as your share. So it kind of helps you keep on, it helps you keep contracted. Okay. So saying the organizations obtain their income from various sources, namely membership subscriptions. We also have payments for life membership. Sometimes people may want to be like a member for the rest of their lives. So maybe we have our Aptex, maybe we decided that we want to create our Aptex Chivina and all of us want to be part of that Chivina. So I tell you, if you want to join our FA Chivina or our FA club, let me just call it FA club. I tell you that you pay 10,000 for membership fee. So you pay that 10,000. And the hell, if you want to be a lifetime member, I could tell you that every year you may pay 10,000. Or if you want a life membership, you could pay maybe 100,000. And then another source of income, we have profits from bar sales. Sometimes some of these clubs may have, some of these social clubs may have an item that they are selling. Okay, may have an item that they're selling. Maybe they have like a restaurant. Usually, like if it's like a golf club, you find that there's like a restaurant or something where people will still buy from things or buy from wines and all that. So when that exists, of course, it calls for need to know whether you're making a profit or not. And so you have to determine that by doing, of course, a regular trading account. So one of the other sources of income is profits from the bar sales. Then profits from social events such as dinner dances. Our FA group may decide to host dinner. Maybe we're hosting dinner for the sick people in Congo or something. Anyway, it could be for any cause, but we have decided to host a social event that's maybe in line with why we exist. And so uh, the money that, and maybe you may decide to sell off a ticket, maybe each ticket is 100,000 or 200. The money that you're going to collect from each of the tickets that has been bought, or maybe you've seen these auctions happening, that is also a source of income in the non-profit making organization. Then we also have profit from the sale of food in the club, cafeteria, and restaurant. Then we also have interest received on investments. At times you may keep your money with these people, you pay life membership and whatnot, but then at the end of the day, the money that you've paid is also invested somewhere else. So what will happen is that you will invest somewhere else, and then maybe you invest 10 million, but at the end of the day, you end up receiving 10.5 million. That means that the extra 500, where has it come from? Okay, probably your 10 million was invested and now you're receiving interest on investments. Just excuse me for a quick second. Okay, moving on. Yes, donations could also be a source of income. So what are the different funds that the non-profit making organizations could be having? Like, what are the different monies that a non-profit organization could be having? When I talk about, you see, with sole trader and manufacturing and all profit making organizations, they start their businesses with capital. And that capital, it could be in form of debt, it could be in form of shares, that is equity. So we usually, you will see us when they make profit, we shall create a retained earnings account, and we'll keep on adding that profit to the retained earnings account. And maybe if whatever capital they started with, it will always be showing in our statement of financial position. But here with a fund, it's similar. What we call their capital is basically what we have here as a fund. Though the idea is not the same, because capital, the other side, is used for business and whatnot. Here, capital may be different, but the concept of capital is ideally the same. So what is capital in profit? It's called a fund in non-profit, and you will treat it the same way. It's also a liability. So different funds, we have a life membership fund, we have a building fund, and the life membership fund is the fund for, we're saying this is the fund for the money subscribed for life membership by various members of the organization. So you tell them, maybe if you pay $1 million, you don't have to keep on paying every year, or you'll be a member for life. So you don't have to renew your membership. So they will give you money. You could have a building fund. These ones you may have seen them with like churches, with church groups. Now we need to go and build a building here, so you give us money. Not offertory. Offertory is not a building fund, but you've seen like there are those church groups whereby it exists for a particular reason. And usually, if let's say you want to build a school, you want to do what, they'll tell you, let's contribute for this until you reach the limit. So that building fund is set up whereby the organization sets aside money to save for the cost of a new building extension. And this money might meanwhile be invested outside the organization to earn interest income. So how do we account for special funds? Special funds, basically, it's people giving you money. So when people give you money, of course, when people give you money, let me just get my pen, give me a second. When someone gives you money, we know that our cash is usually debited. Okay. Remember, with profits, you would have credited capital. But here instead, we shall credit the special fund account. But these people may not let the money just sit there and be looking. They may decide to go and invest it. So of course, when they invest it, that means they're picking it out of the bank and taking it to wherever they want it to be. So they'll have to pick that money from the bank by crediting cash stroke bank, that is crediting cash, and then they will put it wherever they are investing, which will be a debit of investment. And so when the investment earns interest, we are getting extra cash outside the money that we have already received. So we shall debit cash. We shall debit cash. And because we are receiving income, we shall credit income. Income increases by crediting it. So if let's say we had received subscriptions of 40 million, we'll debit our cash 40 million, and we'll debit our special fund with a 40 million. If we had invested that 40 million at maybe a rate of 10%, we would show that we've invested 40 million, sorry, and we show that we reduced our cash by 40 million. And so let's say when we earn interest of 10% of this 40 million, that should be 4 million. So we'll show that we have our cash of 4 million that we have earned and the corresponding entry of 4 million. And that would be it if those were if we were to apply figures there. Okay. So how does a receipts and payments account look? We're saying it's a summary of a cash book of a non-profit making organization, and it is used to prepare an income and expenditure account and the statement of financial position. So the items that are in the receipts and payments account, we pick them and use them to prepare our income and expenditure and the statement of financial position report. So how do we prepare the income and expenditure account? We're saying that we calculate the balance on the, let me start from here. Say examination questions usually often provide the receipts and payments account, balance of assets, liabilities, and at the beginning of the period, and details of accruals and prepayments at the end of the period. So you will be basically required, because of the same that the exam usually has information in regards of receipts and payments, in regards of assets, liabilities at the end of a period, and details of any accruals and prepayments at the end of the period, like we'll see in the question we're going to attempt. So how do you calculate, how do you then reconcile the report, and how do you make a full report? First and foremost, the first step of this is systematic. That means that one step follows the other. The first step is always getting your statement of affairs, making sure that you have your accumulated fund checked. So yes, making sure you have your accumulated fund and it's correct. So you will calculate the balance on the accumulated fund at the beginning of the period. You will do this by drafting the statement of affairs. After that, you prepare the trading account. By now, I've sung trading, we all know what it is. And then after that, you prepare the income and expenditure account for the same particular period. So if you're doing for the year 2024, all this would be happening in the year 2024. And after that, you prepare a statement of financial position at the end of the period. This you're also very well conversant with. So however, before we prepare these accounts, the statement of affairs, trading, income and expenditure, and a statement of financial position, the accountant will normally consider the balances of the following accounts. So in addition to these reports that we have up here, we have things to do with the membership subscriptions account, bar trading account, and life membership account. So determining the balances on the above accounts form an important part in the preparation of the income and expenditure account, plus the statement of financial position. Since we are saying these balances of these three feed into the financial accounts for a non-profit making organization. So what is a membership subscriptions account? We're saying annual membership subscriptions of clubs and societies are usually payable 1 year in advance. So let's say if we have our Chibina here as FA class, I would probably tell you, let's all pay. If let's say we are going into the 2024, I'll tell you, let's pay for 2024 before we even begin. So that the money that you pay is the money that you know you'll be using all through the year. So it's ideally you pay for subscriptions in advance. Of course, there are late payments, and those late payments they will usually be arrears. So when you know that you're supposed to pay 1 year in advance, that means that if let's say our year moves from Jan to December, you're supposed to have paid for your next year by 1st Jan of 2024, so that you're able to have subscription all the way through for 2024. Okay, so the club receives from members for benefits which the members have yet to enjoy, and so payments in advance by members. I was saying being receipts in advance to the club or society will be shown in the statement of financial position, or the club as a current liability. So when you give the club money, if let's say we have our FA club, maybe with a club that deals with the accounting and whatnot. We try to make our people, businesses aware. So it's an association, just like you actually, let's use iSpal. So just like you see with iSpal, it's supposed to be a not-for-profit making organization. It's there to help us become certified accountants. So ideally, you pay subscription, I think, every year. So you're supposed to pay the subscription before you utilize it. Don't wait for the end of the year when you've already used all iSpal's resources and then you pay. You're supposed to pay at the beginning before you actually utilize that money. So when you pay, it's them you're demanding. You have a right to say, oh, you didn't send me these emails, you didn't send me this, you didn't send me this, because I've subscribed. So when I subscribe, you're supposed to give me the services that that subscription entails. So the moment you pay money to an organ, you pay money to like a society or a club, let's say it's Rotaract, you pay a subscription, Rotary, sorry, you pay a subscription, you become a liability to them because now they are obligated to fulfill whatever contractual obligations they may have with you. But if you've not paid, you are an asset to them because they are demanding from you money. So it means that you are receivable. I'm not going to go through these notes, I just explain them. This is how the subscriptions account looks like. Please, just the way it is how we're going to be using it in the question. There is not going to be need for many adjustments. So of course, as usual, we know we'll have title, have a social club subscriptions account, our date, our particulars, the amounts. So this is the debit side. This is the credit side. The debit side, you're seeing we have balance brought forward areas. In case there are areas, we shall have in case there are like there's a balance that's in areas, we shall put on the debit side because it's an asset and it's going to increase our assets at one point. It's a receivable. Uh, in case we have advances, this is like a negative balance. This is like an overdraft. This is like a liability. It's an obligation. So obligations increased by crediting them. We shall open it on the credit side. And then if we received any cash, we will come and show it in our subscriptions account. If we have any balance carried forward, we shall balance off. Of course, if you open your areas here, that means that a natural areas balance will close on the credit so that you can come and open it on the debit. Same for an advance. I'm just going to give you 2 minutes. Appreciate this. Just look at it, internalize it and appreciate it, and then we can move forward. The 2 minutes are elapsed. So we will move on. After that, we will, of course, get our bar trading account. The bar trading account, we know, the moment you say the word trading, you just know that they want you to get a gross profit. So if a club, you're saying if a club has a bar or cafeteria, a separate trading account will be prepared for the trading activities. So a bar account will take into account the following items: bar takings, opening stock, opening stock. When I talk about bar takings, I mean sales, basically. Opening stock of the goods, the purchases, and closing stock of the goods. The first, of course, that is to help us get the gross, that is to help us get the cost of bar sales. And then we have the gross profit items, which we will get by subtracting A minus B. That is subtracting the bar takings minus cost of bar sales. After that, we have other expenses directly related to running any bar, if there are any. And then we have a net profit. So this is like the normal accounting that you have so far looked at. The bar net profit is then included under income in the income and expenditure account. Or loss, of course, if it's a loss, then it would be included under expenditure. Life membership, when a member pays for life, we make entries like I showed you. It's like part of the fund. We will debit our cash, we will credit our life membership fund. So our cash will increase, and also our fund will also increase by crediting it. So it is shown in the statement of financial position of the club or society immediately after the accumulated fund. So when we are doing our statement of financial position, we'll show our liabilities. First, we'll show our accumulated fund, and then after that, we'll show our life membership fund. So there are two ways we can account for the life membership fees. Someone may pay you money for like 10 years, and we will call that probably life membership, or the forever, for it, like for as long as possible. We know that human beings, we don't live forever. We have cutoff. So how do we account? One of the ways we can keep the life membership fee in the life membership fund until when the life member dies. And then after you have died, this fee can be transferred out of the life membership fund and taken directly into the accumulated fund. So if me, I have paid money to Rotary, or I've paid money to any membership, any not-for-profit or any society, I've paid a life membership fee. And it so happens that I've paid it today, and I had said maybe it will take me like 50 years. Okay, I'm assuming I will die then. And then I die tomorrow. That money will not be given back to my family. No, you had already paid it as life membership. So what is going to happen? They will just remove it from the life membership fund, and they will put it in the accumulated fund. So what the entry there will be, we will, when we are removing it, in case like upon death, we shall of course remove it from our life membership fund by reducing the life membership fund, that is by debiting life membership fund, excuse my spelling, and of course we shall credit our accumulated fund because now it has received new money. Accumulated fund, and that is how it will be. So what is the other method? The other method, we can write off subscriptions to life membership fund by transferring a fair amount from the fund into the income and expenditure account. So you pick money, instead of taking it to other accumulated fund, you could like amortize, just like you saw when we were depreciating, stroke amortizing. If let's say you have paid 50 million for a life membership fee, and maybe you have paid, of course it cannot be 50 million, like 5 million for life, for you to be a member for life. So what we shall do, let's say we are approximating that that money is going to last you like 20 years of your life, or like 10 years of your life. What we will do, we will get our 50 million. Sorry, we'll get the 5 million that you have paid as membership, 1, 2, 3, and divide it by the 10 years that we are anticipating to be the life value. Okay, so that will give us 500 per year. That will give us 500,000 per year. So this 500,000, how we shall treat it is that we shall be reducing your life membership balance, and the corresponding entry will be in your income, will be in your expenditure. So what that means is that we shall reduce the life membership fund, okay, by 500,000. So if it was 5 million, the first year it will be 4.5. Okay, and then we shall credit your expenditure, income and expenditure account. Income and expenditure account. So it will reduce the income and expenditure account, and it will also reduce the life membership fund until we zero it down to 0. So basically, what I'm trying to say is that you will amortize the fund until you zero it down. So how about accounting for the sale of investment? Sometimes you give money to the fund, you pay your membership and whatnot, and they tell you every year you'll be getting maybe dividends of this much percentage of what you invested according to your shares. Those kinds of things, I know you've probably experienced them. So they may invest your money. So we're saying occasionally a club might sell off some of its investments on non-current assets, and in doing so might make a gain or loss on the sale. The gain or loss on the sale of investment is not shown in the income and expenditure account. Instead, the gain is directly added to or subtracted from the accumulated fund. I'm going to explain this all at once. I'm going to read them for you, and then I can explain. Then the gain or loss on the sale of a non-current asset such as land, which is not subject to depreciation charges in the income statement, is also taken directly to the accumulated fund. And then the third sentence tells us that the gain or loss on sale of non-current assets which have been subjected to depreciation is recorded in the income and expenditure account. So if the item that you are selling off has at one point been affecting the income and expenditure account, could affect the income, it would probably affect the income and expenditure account in terms of depreciation, because most of the times a non-current asset will affect the income and expenditure or P&L as a depreciation charge. So in the event that it has affected the P&L or income and expenditure report as a depreciation charge, when you're selling it off, of course, the gain or profit that you make will also affect the income and expenditure account. But if it has never in any way affected the income and expenditure account, then there is no reason for when you sell it for you to introduce money now or introduce a loss in the income and expenditure account. So for example, when you make an investment, you probably bought shares somewhere else. You have your Chivina, and maybe you've decided to invest your money and bought shares as a Chivina in another company, or maybe you have invested in treasury bills and bonds. You will earn money off those investments. That money then is not going to affect the income statement, but rather it will affect the accumulated fund, because even in the first place, you invested money from probably the accumulated fund. So ideally, if anything, it should be affecting the accumulated fund. So same thing, land doesn't depreciate. You will never see land anywhere in a profit or loss statement or in an income and expenditure statement. So you coming and selling land and then coming and showing that you receive income in terms of sale of land, it's just going to be random. It's going to just happen, and people are going to ask you, where has this money come from? But rather, because you probably made a profit, you will take that profit to the accumulated fund. It means that your money will also increase. So you don't affect the income and expenditure, but rather you go and affect the accumulated fund. So moving on, we are going to look at an activity. I'm going to share my screen. Do you have these notes? Do we have the notes? Okay, let me get the notes so that we can get started. I've shared them. Let me know once you receive them. I've shared them on your WhatsApp. All right, let me share my screen then. Let me know once you see my screen. You should be able to see an Excel screen. Can you see it? All right, so let's get started. The question, activity one, Kampala Golfers Club. Are telling us below are the receipts and payments of the Kampala Golfers Club for the year ended 30th June 2020, meaning that the year started on 1st July 2019. We have bank balances. On the debit side, we have bank balances. A receipts and payments account, I told you it's like basically the cash book. Money you receive, money you pay out on cash basis. Here, this is all cash basis, receipts and payments, just like a cash book. Cash and bank balances, that's what we had. Members subscriptions, match day collections, broadcasting revenue, bar takings. I even showed you that there are sales, donations, and rental income. So it seems like this is what we received. What we spent out, we spent up on operating expenses, players and training costs, repairs and maintenance, purchase of bus stocks, administration expenses, salaries and wages, other expenses. And then we have our balance carried forward, which was at 261. This looks good, means that these guys still had money even at the end of the year. So They also told us that the following information is also available. The following information is available. A stadium, which cost which was the cost of a stadium. When we closed, these balances, as you're seeing them here, you see they are comparative balances. We have balances for 2020 and balances for 2019. This looks like it's a statement of financial position. So I know these are closing balances. A closing balance of 2019 is an opening balance of 2020. Because remember, the year ends, for example, if just it's a regular year, the year will end on 31st December, and you wake up the next day, it will be 1st Jan. So if you close the year when you have 5,000 shillings in your pocket, if you close the year when you have 5,000 shillings in your pocket, don't expect to wake up with 50,000 unless you're a thief. But even if you're a thief, you would have worked for it. So ideally, if it reaches midnight and you have 5,000, the moment it's 001, that's a new day. Your opening balance would be 5,000. So what I'm trying to say is that the money the balance that you close with for one period opens up the next period. And that's something that you take note of and be keen about. So we closed 2019 with 723, and we closed 2020 with 705. That means that we opened 2020 with 723. So this 2019 is just there to scare you a bit, but when you know that what we close with is what we open with, it shouldn't be a problem. So the stadium cost us by the beginning of it cost us 822 billion. At the beginning of 2020, or when we closed 2019, we had its net book value. Because remember, when we were doing our statement of financial position, we record items at their net book value. So when you see this value here, don't ask, now, did we sell off some part of the stadium? No, you didn't. You recorded the stadium at net book value. So being a very good accountant, you know that we depreciate buildings. So that means that ideally, if the cost was 820, it means that by the time we reached 2019, we had depreciated the difference of 882 against 723. So we opened 2020 with 723, and we closed when the balance has even reduced further to 705. Our plant and equipment had a net book value of 350, and we closed the next year when it was 312. We had subscriptions in areas. We had people who hadn't paid us. We opened the year with people who hadn't paid us. There were 35.8. When we closed the year, we had 46.2. It means that more people didn't even pay in this year of 2020, because we were demanding only 35.8 thousand from people. But then when we were closing the year, we were demanding even more. Subscriptions in advance. We opened the year when people had paid, the advance payments were 5.5. So this was basically our liability. But when the year ended, we had more people who had also paid in advance. So that means that we have a higher liability now. Owing to suppliers of bus stocks, suppliers gave us stock. So at the beginning of the year, they were demanding us 31.9. And when the year ended, they were demanding us 37.5. This clearly shows us that we bought more stock during the year, which is a good thing. We hope we sold it off. Inventory of the bar items. This is opening stock versus closing stock. We are seeing that we opened the year when we had 20.9, and we closed the year when we had inventory worth 25.3. So we bought more things, more items. And outstanding administration expenses, we started off when we were being demanded 4.6 for admin expenses, and we closed the year when we were being demanded 6.4. Outstanding means we are being demanded. At June 30th June 2020, salaries and wages advances were 18.3. We had given advances worth 18.3. Like I'm going to say again, don't mention the word advance, just know that you're adding. Just make sure you're adding to the right amount. And then while the broadcasting revenue, also it seems that we had a broadcasting activity that we took care of. The broadcasting revenue was 21.6. What else does the question ask? Tell us. It's now telling us to derive the accumulated fund of KGC as at 1st July. Remember, I told you this year starts on 1st July 2019 and ends on 30th June 2020. So the moment they've told us derive accumulated fund, I'm just going to go and start with my statement of affairs. Then they told us to prepare the bar trading account and the membership subscription account. We are going to look at that as well. And then we will prepare the club's income and expenditure account for the year ended 30th June and the statement of financial position as at 30th June. So we start off with our statement of affairs. Again, as the good finance professionals that we are, we'll always start with our heading, Kampala Golf Club, statement of financial affairs as at 1st July. So let me put in my particulars, my details, and then we shall start with our statement of affairs. Remember, I told you it's just basically another word to mean opening balance sheet. So I'm going to look now. I can't start looking in this cash book because these are things that happen during the year. So I just have to look for opening balances. And I know that things that look like opening balances are here because the KGC, the question has showed us that KGC had the following balances. So it had these balances as of 2020. So these ones should be the closing balances. Balance sheets record closing balances. Remember that always. Statement of affairs, record opening balances. So we had opening balances, these ones here. So this is what we are going to be looking out for. Of course, we know that we always start with our assets. Okay, so I'm going to look for all the assets that there may be, and I'm going to add them there. First and foremost, they're showing us that we have a stadium which opened at a net book value of 723. I'm going to come and show my stadium. It opened at a net book value of 723. Don't ask me, hey, we are not depreciating. This is already depreciated. They have not told us about depreciation, so we are not going to start looking for rates that we don't have. They've given us a net book value, and that is it. We have PPE, property, plant, and equipment. We are saying that the opening balance was 350. So we'll just come and paste the PPE value at 350. What else do we have? Subscription in arrears. These are liabilities. Subscription in advance. These are assets, but remember we record according to order of liquidity. So owing to supplier, these are liabilities. Inventory of bar items. So I have here something that is the less liquid compared to the areas. Remember always remember we organize these reports in order of liquidity. So inventory of bar items, you're saying that we opened our year with bar items worth 20.9 million. So I'm going to come and show the opening of the bar stocks. The opening bar stocks, sorry, which was 20.9 million. And then I can move on to my areas. This is the next in order of liquidity, 35.8. So 35.8. Do I have any other? Yes, I do. So I've looked here. I'm seeing this is all I have. These ones I've entered them. But we also have a balance brought forward from the bank. This was an opening balance as well because it's a balance brought forward. It means that it closed in 2019 and we used it to open the next day. So our bank balances are also part of our statement of affairs. We opened the year with balance worth 157. So we're going to add that up. How much is that going to be when we add up our assets, PPE, bar stocks, arrears, and cash and bank? How much will that be? And how much are our total assets? Yes, Faith. What is the question? Thank you, Peace. Faith, we are still waiting for your question. Thank you. The assets are worth 1.2 million. So I'm going to add up my assets as we wait for Faith. We then move on to our liabilities. So we go back to our report. Do we have any overdrafts here? Because this is ideally our cash book. Let's see before we even go down. I'm not seeing any overdrafts in the receipts and payments account. The bank balances were actual, cash and bank. So I come back here and look for anything that would look like liability. We have already taken care of stadium PPE subscription in arrears. We've taken care of it. So subscriptions in advance should be probably our liability because people paid us already and we have not yet delivered the service for which they paid. So we are going to show that we have a liability for subscription in advance, which is worth 5.5 million. And then we will move on. They told us owing to suppliers of bar stocks, there are suppliers who are demanding us 31.9 as of our opening date. We're going to come and show that we have payables or we have owing to suppliers, whichever you want to term it, of 31.9. And then we also opened with our outstanding admin expense of 44.6. So I'm also going to come and show that we still have a liability of 4.6. So when we add up, when we check here, we don't have any other more liabilities. So when we add up the 5.5 plus 31.9 plus 4.6, we're able to get a total of 42.1. Now, the 42.1, of course, you see the balancing is not coming because ideally your assets are supposed to be equal to your liabilities. So when we get our assets against our liabilities, we see that the balancing is not balancing by 1.2. There's a whole 1.2 that is missing. So this difference, the balancing figure, is what we are going to call our accumulated fund, that 1.2. So we'll call that the difference between the assets and the liabilities that you have is what will be your accumulated fund. And that is going to be our fund that we are starting the new year with, the 1.2. Do we have any questions there? Why are we recording inventory using opening stock? We are getting a statement of affairs. A statement of affairs records opening balances. It's the balance sheet that records closing balances. I hope that makes sense and helps. So for as long as you're doing a statement of affairs, you just look for everything that's opening. That's either an asset or liability. Okay. So moving on, do we have a question? Do we have a question before I move on from the statement of affairs? This is how it looks like. So it's just basically like an opening balance sheet. The question next asked us, prepare the bar trading account. This one, I'm sure by now you can even do it when you're just fresh from your sleep. You do the trading account. I hope you're practicing. So of course, as usual, as good financial reporters, we will start with our title. Kampala Golf Club. We are reporting for Kampala Golf Club. Member subscription account. Now we will then go ahead and fill in our details. That's the date, particular. It's going to be there. This one, we are just going to refer to the pro forma. The way the pro forma is, we are just going to be substituting. So the pro forma shows us, when I go back here to the pro forma for the subscriptions account, we will just pick and substitute for figures. Tells us we will start with our balance brought forward area. So I'm going to go and look for anything, if we have anything to do with balance brought forward areas. I'm going to come back to the question here. Do we have any balance brought forward in areas? For we are looking at the subscription account. I'm saying we have here subscription in areas. So we brought forward. Well, that means that we opened. The balance brought forward is basically an opening balance. Carried forward is a closing balance. So we brought forward areas of 35.8. I'm just going to go to my subscriptions account and show that at the beginning of the year, that's as at 1st July 2019, I brought forward 35.8 worth of subscription in areas. I'm going to go back to my pro forma. We also have to find a balance brought forward in case we have advances for subscription. Do we have advances for subscriptions? I believe so. Subscriptions in advance, we had a 5.5. I'm going to come and add my 5.5 there. Subscription in advance. It was 5.5. Okay. The pro forma next shows us that in case we have any cash, we also include their cash in terms of subscription. So let's go back to the question and look for cash. Let me know once you see the cash. Do we have any cash we paid for subscription? Yes, I'm seeing here member subscription 300,700 shillings. So I'm going to come and get that 300 and also add it as the cash received on behalf for the purpose of subscriptions. I'm going to show that I received cash during the year of 300,000. Going back to my pro forma, what else do they ask me to see? In case I have a balance carried forward, that is area. So now we are doing closing balances. We will just come back to our question here. I saw here we have closing balances for areas. Closing balances for areas, we have 46.8. This is the closing balance in areas. We closed with areas of 46.8. Those people hadn't paid us. So I'm going to come to my subscription account and I show clearly that I closed with areas of 46.8. Then, of course, if I open subscription in advance on the credit side, anyway, let me not confuse you. Then we shall go back and look for also, as per the pro forma, and look for balance carried forward in the advanced balance carried forward, which will be, do we have balance in subscription in advance? Yes, we have a closing balance of 20.3. I'm going to come to my statement of affairs and I'm going to show my 20.3 millions as my closing balance. So of course I balance it off. This says subscription in areas. This closing balance here, this one that I'm highlighting bold, this closing subscription in areas is going to be the same as the closing subscription, the opening subscription for the next period. So I'm going to balance off my account. And also this closing subscription in advance, this 20.3 is what is going to open up in the next period. It's going to be my balance carried. It's going to be my balance brought forward. So I have not yet balanced the account. Now, if we go back to the pro forma, we see that the balancing figure for the subscription account is usually what we shall take to the income and expenditure. For us to get the balancing figure, usually everything else is provided except for the balancing figure. So we will do our basic mathematics. When we add up these two sides, when we add up these 335 and the 230, sorry, the 20.3, I don't think we get enough money. So I'm seeing which side needs to be balanced. This, that's only 56. And when I add up here, I have a total of 5.5 plus 5.5 plus 300 plus 46 should be giving me 353,028 shillings. So my balancing figure on all sides is going to be that. So the difference that you're going to get, you will take it to the income and expenditure account. So what is the balancing figure here? It is a balancing figure. 296, 830, 844. Thank you, please. Let me check my own calculator. Yes, thank you. So we have balanced off our account. So basically what this means when you interpret it and you look at it, it shows you that we received money. Yes, we received subscriptions. When we compare against the areas, we had, maybe we started off when people hadn't paid the 35, but we had also received a 5.5, and then people paid off more cash, and then we still had some people who hadn't paid off. Okay. And then we also had people who had also given us in advance. So what that means that we actually, the net subscription that we received for the year minus the arrears and advances is the 296. And so this is the money that we're going to show that we actually received in our income. Not the 300,000, because the 300,000 was inclusive of area money, and it was also inclusive of advance money. That's what it means. Okay, moving on. The question then went further ahead and asked us the club's income and expenditure account. We've done the bar trading. Have we done the bar trading? No, we've not. So we're going to do the bar trading account. As usual, because we are very good students, we will do our title and our details. We'll show our particulars. So this you now know by now. We're going to look for ourselves, because we're doing a trading account. We're trying to find our gross profit stroke net profit in case the bar incurred any expenses. How much are our bar sales? Here they showed us that we received 233 from bar sales. We're going to come and show the bar takings were worth 233,000. Then we shall of course less our cost of sales. Here we shall call them cost of bar sales. Of course, we know by now cost of sales is equal to opening inventory or opening stock. So I'm going to come and see and look for my opening stock. Here, I know that owing to suppliers, no, inventory of items, we opened with 20.9. So I'm going to come and show that I opened my stock with 20.9. We know that the next step is usually purchases. So we're going to add our purchases. Add purchases. So we go back to the question and we look for those purchases. Let's start from the top. If there are any purchases that were paid for in cash, they should probably be in these payments. Operating, players, repairs, purchases of bar stocks. Here we have 148. So we're going to copy and paste. As you can see, this number is just basically copying and pasting. We have our cash purchases at 148. Just like you see, the question is about copying and pasting. You also know and remember that finance is also very, very, very much also about paying attention to detail. In the question, they also told us that owing to supplier of bus stocks, we opened with 31 and we closed with 37. The people who are demanding us at the beginning of the year were only demanding us 31.9 million. But by the time the year closed, they were demanding us 37.4 million. And this is owing to the suppliers of the bus stocks. So the people who are giving us stocks were now demanding us more money than before. What that will tell you means that we probably picked more things from them and we didn't pay. So how are we going to know how much we picked from these people? I'm going to get the 31, sorry, I'm going to get the closing balance, which is the 37,456 minus 31,948,000. So it means that we bought extra stock of 5,508 shillings. So we are going to come and show that we have credit purchases. It means that we got more stock, but we didn't pay for it. Remember, the 148 was gotten from the cash book. It's the stock that we paid. So this one, there are credit purchases we didn't pay for them. So I'll come and show that I have my 5.5. Of course, it was a credit purchase, which I got by subtracting the closing balance minus the opening balance. So when I add that up, I'm going to get a total of 175. And then, of course, we can list our closing stock. We don't have returns, carriages, all that we don't have. The formula is just thorough and basic. Our closing stock, inventory of bar items, because we are doing a bar trading account. We closed with a stock worth 25.3 million. So I'm going to come and show that we closed with stock worth 25.3 million. It's in brackets because it's a negative. So how much, when I add up this, the stock plus the purchases, and add up my stock plus the purchases, I'm getting minus that, sorry, I'm doing double entry. When I add up my opening inventory plus the purchases, okay, minus, when I add up my stock plus purchases minus the inventory, I'm able to get 149,800,000. So how much is going to be my gross profit? Because I'm seeing here I have sales of 233, but I have stock of 149. So ideally I should have made a gross profit. How much is my gross profit going to be? How much is my gross profit going to be? Let me show you. 233 minus 149. Thank you, please. 83,851. Okay, so I'm gonna add that up. So my gross profit is going to be 83,851, and I've gotten my marks. Let's see how many marks there were. Oh, it's not marked. That's okay. So we move on. We are going to now prepare our income and expenditure for the year ended 30th June, and also the statement of financial position. So as usual, I'll create my account. Kampala Golf Club with my title. And of course, I'll start with my incomes. So we could always start with the things that we've already adjusted. We have subscriptions first. We got our subscriptions of 290. We're going to come and copy and paste them because we've already done the math there. Okay, now we can go back to our question. We are just going to copy and paste all incomes that we see. This question is actually easy for you to get marks on because it's majorly copying and pasting unless you're doing any adjustments. So we already looked at cash and bank balances. We know these are balances. We have membership subscriptions. We have already adjusted it to 296. We know that this is a cash book. All the monies we are receiving are on the debit. All the monies we are paying out are on the credit. I'm just going to carry everything else I haven't put. So the match day collections, the broadcasting revenue, the bar takings, the donations, and rental income. So I'm going to add my match day collections. My match day collections were worth 994. Income from broadcasting, I'm also going to add it. How much was the broadcasting revenue? 386. There was a note on the income on broadcasting, I remember. You have to go back to the question. Broadcasting revenue that was paid in cash was 386. When we go to our notes, we have outstanding broadcasting revenue. It means that inclusive of, outside that money that we received in cash, we are still demanding 21.6. So we need to show the total broadcasting income, whether we received it or not. So we shall come and get our workings and put show, and we're going to show our broadcasting income. We received cash worth 386, and we had our outstanding revenue worth 21.6 million. So when we add up 386 plus 21.6, we're able to get 407. And so we are going to come and add that 407 in our income statement. Okay, we move on. What other incomes were there? We had rental income. I didn't see anything to add just about rental income, so I'm also going to carry it and add it there. We had donations, 98,000. I'm going to come and add my donations. Okay, then after that, we have our sales, bar takings of sales. We collected money worth 233,000. But this money is adjusted to accommodate, is adjusted for us to get the trading account, for us to get the gross profit. Why? Because yes, in as much as we might have sold, we might have gotten sales worth 233. We also had the cost of these sales that we actually made, and the cost of the sales that we made was 149. So from the 233, 149 was supposed to go back to the business. So the actual income that we got, the net income, is this gross profit that we have here. So we're going to add that gross profit. In case the bar had any expenses, then we would also subtract the expenses from this 83, and the net profit is what we would take to the income and expenditure. In case it had a loss, then it would appear under expenses. So we're showing that the bar had a profit of 83,000. So when we add up our total income, we realize we collected a total income of 2,156,000. After we've gotten our income as per the pro forma, they tell us to now remove expenses. Now, just like we did with incomes, all the things on the credit are going to be your expenses, unless they have any adjustments. So you can always just copy and paste. Operating expenses, I'm going to come and add them there. They have no, I don't think they have any adjustments. Player and training costs, there's nothing to adjust there. We're just going to also add them. Next, repairs and maintenance, there was nothing to be adjusted about that. We add them. So you see, I'm just making entries and I'm making my marks. Okay. Then the next we had the purchase of bus stocks. No, that's not an expense. We had admin expenses. Admin expenses were worth 192, but I think there was a note down here if I'm not mistaken. Salaries and wages, sorry, it was salaries and wages. Advances, so it wasn't an admin expense. I'm going to come and add my admin expenses there. How much were they? 192. So ideally that should be it, but then also when we look at outstanding admin expenses, just like how we looked at owing to suppliers, also for admin expenses, we are seeing that we started off very well. We had admin outstanding. People were demanding us 4.6 million or 4,652, and then when the year ended, we were being demanded 6,426. It means that there were some people we still didn't even pay by the end of the year. So our admin expenses, we had like we had an increase in our outstanding expenses. Sorry about that. So outside what was paid out in cash, we also had some credit expenses that we incurred. So we are going to add them back. They are worth 1,774. So for we'll get the 1,774 and add it back to the cash admin expenses that were actually paid of 192. So we will come back to our I&E account and calculate for our admin expenses in our workings. Our admin expenses. So we paid cash of 192. So you can decide to make a table like the one that I made, or you can just do rudimentary and you show that there was cash paid, then you subtract the difference and then you add it back. So I had an opening balance of admin of 4.6 thousand, and then I paid out cash of 192. Well, then at the close of my admin tier account, I'm closing my admin tier account with 6,426. So when I balance that off, this should be 192 plus 6.4. My calculator shows me that it's 199,216. So the balancing figure, which will be 194,564,000, will be what I'll take to my income and expenditure report. So my income and expenditure report is going to have the admin there. Next was what? Salaries and wages. There was also something to do with salaries and wages. Salaries and wages, the advances were 18.3. I told you the moment you see the word advance, just subtract. So I'm going to come again to my account, right, and show my salaries and wages and calculate the net salaries and wages that are actually paid in that particular year of July 2019 to June 2019. So I'll get my cash received, which was 355, and I'll get my salary, my wages prepaid, my prepaid wages. I'll subtract the cash minus what was actually prepaid to be able to get only the salaries for that particular year, which will be 336. So I'm going to take my 336 to my income statement, my income and expenditure statement. Go back to the question. We had other expenses of 98,000. Let me show them. Other expenses of 98,000. So this was a balance. Of course, we don't know what that is. We can't include it in the income and expenditure account. So we come and see if there's any expenses here that might have changed. We have looked at the admin increase, and we've included them. Inventory, we looked at this with the opening stock, the cost of sales. Owing to supplier, we've also already looked at it under purchases. Subscriptions in advance, we've looked at subscriptions account. We have plant and equipment. We're showing that plant and equipment, when the year began, we had a net book balance of 350. But by the time the year ended, we had a net book balance of 312. So the difference between there, that means that the 350 reduced probably because the equipment was depreciated. So we need to find the depreciation charge. How are we going to find the depreciation charge? By subtracting the opening balance minus the closing balance. So for the stadium, the opening balance, opening balance was 723 and the closing balance was 705. The difference between these two figures should be our depreciation charge. So 723,000 minus 705,000 will give us a difference of 17,645. And then same story for the PPE. We had 350 and we finished off with 312. That means that the difference there, okay, the 37,000 is a depreciation charge. So let's see if we have anything else to add. We have added, I think, all that could be. Let's get our total expenditure. How much is our total expenditure? I'll be waiting for the answer. Okay. Thank you. Total expenditure is 2 million and surplus expenditure is 124,000. Okay. Yes, thank you. Total expenditure. So that when we subtract the total income against the total expenditure, we'll have our surplus of 124,000. Okay, so this is how our statement of income and expenditure will look like. The question also further asked us to get Just us to get the statement of financial position. Statement of financial position for Kampala Golfers Club. We will once again start off with our headings. And we, of course, we know by now that we start off with our assets. So some of these things also, the good thing with this question, even if you're stuck, you can just copy and paste whatever will be correct, because at least there's always something that is correct. So we are getting now our assets. We are doing our statement of financial position using closing balances. Financial position, closing balances, statement of affairs, opening balances. So I'm just going to come and look here. Ideally, I'm going to carry everything that is here straight up. So the stadium and the plant and equipment, I know these are the assets. I'm going to come to my statement of financial position. The good thing they've been recorded at net book value. So I'm going to just come and paste the stadium value at 305. The PPE, let me just move this here. The PPE is worth 312. I'm going to add it there. That should be all for my non-current assets. So when I add that up, when I add up my non-current assets, I'll get 1,018,000. I'll go forward and get my current assets. Okay, let's just pick the things that are already here. Current assets, we have, we're organizing in order of liquidity. So ideally we should start with bar items. Bar items, we have, inventory, the closing stock is 25. So we're going to come and show we have 25 closing stock, 25,000 worth closing stock of bar inventory. And then we shall go to the next liquid item, which should be the receivables. Subscription in areas, these are people who haven't yet paid us 46,000. I'm going to come and show we have receivables, also called subscription in areas, which is worth 46,000. Then what else will I have here? Outstanding liability owing to suppliers, liability, subscriptions, adverse liability. I think that should be it for the assets on this part. So let's look elsewhere in the question. We have salary advances. This is supposed to be a prepaid. Our outstanding broadcasting revenue is also supposed to be money that we've not yet received. Okay, so we're going to add our broadcasting revenue as part of our receivables. We're going to show broadcasting revenue. We can always write broadcasting revenue, not revenue, so that we avoid confusion. Broadcasting revenue worth 21.6, and then we also have the salaries worth 18.3. These were also advances we gave out to. And then when we come back to our cash book, we see that we have a closing balance for balance carried forward. That means the cash that was left either in bank and at hand was 261. We'll just transfer it there as well. A cash and bank at 261,000. So how much will our total current assets be? How much is the value for our total current assets, and also what's the value for our total assets? How much is the total for our current assets? Okay, thank you. So we are saying our total assets are worth 3,704, and our total current assets are worth 3,704. How much did you say were our assets worth? 1.3 million. Okay. Yes, thank you. 1.3 million. Our total assets. So we move on to our liabilities. Liabilities. So this time around, instead of calling it capital and liabilities or equity and liabilities, we'll call it funds and liabilities. So just like how we used to start with capital, we now start with our funds, and we'll clearly show that we'll list those funds. We have our accumulated fund brought forward, which is the first one. We got the accumulated fund brought forward by adding up by creating the statement of affairs and balancing it off. So our accumulated fund we have so far is 1.2 million. I'm going to add that 1.2 million to my statement of financial position. And then also I'll add the surplus for the year. If it was a loss, I would subtract it. The surplus for the year was 124,320. So I'm going to add 124,320. That should be it for the funds. There is nothing like membership, life membership and whatnot. So I believe this is it for the funds. But in case there was any other fund, you would add up the money there. So when I add 1.2 plus 124, I should be able, or you should also be able to get 1.3 million. And after that, I'll get my current liabilities because I don't have any non-current liabilities. Of course, once again, organize in order of liquidity. I know we have payables owing to supply of bar stocks at 37.4. We copy and paste 37.4 here. We will call that payables bar stock. I also know that we have some subscriptions we paid that were paid to us in advance. These ones that we closed with, or ideally, you can also still come back to the question. Subscriptions in advance at 20.3. You're also going to come and show the 20.3. Call that our subscriptions in advance. And then we shall come and see if there's any other liability. Outstanding admin expenses, 6.4. Yes, we shall get our accrued admin expenses. You can call them accrued or you can just call them outstanding, it's okay. So when we add up our current liabilities, they will be worth 64,000. So our total funds and liabilities will be the 64,000 plus the 1.3, giving us 1.392. So of course, when we look at our total assets and our total liabilities, my figure seems to be balancing. And so we'll have answered the question. Do we have any questions in regards to this topic? Do you have any questions?
Yes. Actually, for me, I don't have a question, but I feel concerned. And like now, for us online students, I could say we don't write. And what helps us are the supporting documents, like a supporting document that those are the videos. And when I try to observe very well is that for you, you don't post the videos. Most of our lecturers, even the one of QT doesn't post. You may find that you post after like 1 month. And for me, when I go right away from the lecture, like 1-2 days, I make a review. If I don't make a review, then I forgot those things, even I can't forget them. And the only supporting document are the videos. Now, I feel concerned about that.
Okay, ideally, every class that we've had, I think except for one, that was birthdays, every other class that we've had has been recorded, and you should have access to these videos on your students' accounts. I'm going to take it up with admin and try to see how to get them to you on a more timely basis. So apologies for that. But the videos exist.
Okay, thank you.
Yes, any other question or concern? Also, please try to write, because when you write, it's easier for you to remember.
Of course, it is easy to remember, but this speed we are on, you can't write on this speed. That's why I say if we go back to the videos, at least we can try to write.
All right. Okay, any other question? All right. Thank you.
Solutions, WhatsApp.
Yes, please.
Can we please have the solutions on WhatsApp?
Yeah, sure. Let me send them. Sorry, I keep on forgetting.
Yeah, even yesterday's solutions, we got on the balance sheet.
Which lecture? The one for last time?
Manufacturing.
Are you
There,
sure?
have to
Yes,
click
on the
on sheets. Like you see their statement of affairs, subscription account. When you click on them, you'll see them. Because I got mine. Open the
Okay.
Excel sheet, click on those down sheets down there, you'll see them.
They are Excel sheets.
Yes.
Actually,
Yeah.
isn't it this one? For me, I received this one, the one I'm sharing. And I don't see anything around here. I only saw this. Is it done?
We can't see your screen.
Solution, it is there. When you click on it, you'll see it.
Okay. Right.
Click on solution, down, you're going to see it.
Solution.
Question, solution, then SOFP. Everything is done.
Ndifara simanyi computer nti bwe busibu ndi munakyala. Bibino wane. Neyanziza.
Okay, I've shared the solutions on your WhatsApp. Thank you. Have a good night.